The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. Well, we've got a really special guest joining us again, folks. He was on last Thursday for the Foundation for the Study of Cycles, but he's here today on his own behalf, showing some of the work that he's done. And, folks, if you don't like this, you're not going to like anything. Andrew, are you there?
Hello, Larry. Thank you for having me back on your show.
Hey, we're very happy to have you here. The only thing I'd like to start off with a question, and then I'm going to give you the whole time, and if the people call in, that'll be great. But Norm Winsky, who does some astro cycles, and also Tim Bost, who does some astro cycles, is talking about this date of May 11th and May 12th. Just keep that in mind. If that fits in with anything you're looking at, please tell us why. So, Andrew, you have the mic. Please tell us what you're looking at. And at the end of the show, we'll give you time to tell the folks how they can reach you and find out more about you. So why don't you go ahead and start?
Okay, thank you so much. Larry, what I'd like to do is share with you and the listeners some of the work we do based on cycles and how we use it for getting an edge in markets and predicting. If I may, I'll run through, and I'll also run through some historical cycles as well. And you can see how we narrow them from huge cycles all the way down to a day. And I have some cycles around about that same point as well. And then some the following week as well. And we can talk about those as well. So it's interesting, whichever way we get there is a different tour, as it were, or maybe the same. And there's only one truth, and that's the price of the market. So if I may, I'd like to share some slides with you. Basically, I believe we're in a very critical time here, and I'll explain why with the 90-year cycle coming in, and then we'll look at, hone it all the way down. And basically, what I'd like to do is show you all how you can forecast market crises, as well as put in some of the best trading techniques that we use and our followers use as well. And also, I believe that gold is at a tipping point, and I'm going to show you why. So if it works for you, Larry, I'm going to give you 30 years of my work in however long we've got.
Hey, listen, you take your time, my friend. We're going to have you on again. So do what you're looking forward to today, and then we'll have you back again. So please share with us what you have, Andrew. Everybody's really excited about it, especially me. So go ahead.
Thank you, Larry. So I've got some slides up. Hopefully they can be seen there. But basically, a lot of the world, probably nobody that's listening to this show, but a lot of the world feels that markets and events are random and they're driven by fundamental news. And of course, we don't agree with that. Probably nobody listening to this show agrees with that. And so we believe that these things can be predicted. And if this chart is up here now, guys, I don't know if you can see this, but this is very critical. And this is the basis of our work. And here's a longer-term chart of the S&P 500. And what I want to show you is our proprietary system, where there's a bunch of So let me just make sure we're seeing this here. Right. Here we go. Do you see this chart now, folks? So basically what we're seeing here is this chart of the S&P 500. And there are a bunch of spikes underneath. And wherever these spikes occur, the market tends to reverse direction. And basically, these are predictive. They're not retrospective. They're not volume spikes. And the idea is we can predict them out into the future. So here you can see where we got these spikes, the market's made lows or highs. And typically, we don't know what's going to happen, but we know there's a timing inflection point there. And we know the direction of the market into that point. So just on the longer-term chart here of the S&P 500, I'm expecting I'm going to be looking for a significant change around about late October this year. I'm looking for another one that's already visible. These are the three arrows here, mid-January 2021. And also late November 2021. So we can see these predictive systems way out. We can forecast several years out. So that's the first point. But then we can hone it all the way in and bring it through to daily cycles as well. And we do have a little bit of a spike going on around about the 11th of May. And again, the same deal. We get the spikes on a daily chart, and you can see how these are timing the highs and lows. I've just marked the taller spikes. And this is how we got the high of the market back in February. That actually brought it in. We had a weekly cycle, we had a monthly cycle, and they all came together with a nice daily cycle. So we were pretty much prepared for this. But there are future cycles coming up. I'm looking for inflection points around about the 19th of May, the 5th of June, and the 24th of June. So these are where we're going to see reversals in the S&P 500. So that's kind of an overview of what we're doing. But really, to really understand these cycles, I believe you've got to look at long-term history. There's mathematical order. Again, I don't think anybody's going to disagree with that. Markets and history repeat in behavioral cycles. So I want to just give you a quick overview of that. And here we are in 2020. If there isn't, human behavior is moving in cycles. Many of you attended our Foundation for the Study of Cycles webinar, and I showed all the virus cycles coming in, and at the same time as that, we've also got stock market cycles, which I'll tell you about, and we also had geopolitical cycles in China coming in. And this is how we do it over here in England, in our office just outside London. We've kept these huge timelines, and we list every sort of event, and this is just one of the panic timelines. And this enables to bring a long-term database in. And this is pretty cool stuff for research. And we found the patterns within them. But most of you will be familiar with the decennial cycle, which brings in it's basically the years of the decade. And I always start with this in case anybody has any slight doubt about cycles. But as we all know, years ending in 0 tend to be the biggest bear years. Well, where are we right now? 2020. It's a bear year. Years ending in 1 are not particularly bullish. They're actually still slightly bearish. So, we're expecting this down move really based on the decennial cycle. But, if we look back to 2018, 2019, we got this massive bull market, and that's what's showing here. And, of course, years ending in 5 tend to really start launching a big move up. So, if you're not convinced about cycles, that's a good place to start with that. But the real secret is in the super long-term cycles. It's about knowing where to look. And basically, let's take the 72-year cycle. And we're all familiar with the 1929 crash. And if you add 72 years to that, that took us to 2001. Well, the market started running out of energy as soon as we got into the millennium in 2000. That was the end of the tech boom. Everybody had got a mobile phone by then, or at least that generation of phone. Probably people had faxes, and we were just starting to get onto the internet. But the tech boom there from 95 to 2000, 2001 was 72 years on from the 29 crash. And what is less well known, Larry, is that if you take 1929 and you go back 72 years, it takes you to the 1857 panic. And that was what I call a dual-centric panic. And I know many of you as followers of the work of Gann wrote about this extensively. But, there's a...
Andrew, we got to pay a few bills now, so stay with us.
Sure.
We'll be back in about 3 minutes, okay?
Fabulous.
We'll be right back, folks. Andrew Pantoli of UK talking about cycles.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back. We're talking with Andy from the UK on cycles. And you want to continue, my friend?
Sure, Larry. Thank you so much. So I was basically saying 72-year gaps between 1857, 1929, and 2001. So this is a pretty important cycle. And we can take that cycle then a stage further and just say, well, when's the next one? That's going to be 2073. So, you got to write that down for your kids and grandkids because that's going to be an important one. But doubling that up, we get the 144-year cycle. And this is huge in commodities, quite simply because we can take the 1720 South Sea bubble and the Mississippi land crisis, add 144 years. That takes us to the Civil War, and the price of cotton went up 60-fold. According to Gann's writings, 23rd of August, 1864, cotton traded at $1.84 or 81, up 60 times from its base price of 3 cents just a few months earlier, because it was a case of supply and demand. Nobody was tilling the fields making the cotton, and everybody had uniforms on. They knew there was a huge demand for cotton. You move forward another 144 years, and we get to 2008. And some of you will remember that great commodity boom there. So that's another important cycle. So, again, the next one and this one is 2080 and then 2152. So long-range forecasting is easy, but, you got to tell your great-grandkids that one. But this is the important one, Larry. It's the 90-year cycle. And 90 years is a very common cycle in commodities. Most people just don't look back far enough. And if we take the 1929 crash, add 90 years, that took us to 2019. And you go back 90 years from that, took us to 1839, and we'll look at that in a moment. And this is the 1929 crash pattern where the market came down 90%. And in 1837 to 1839, the 180-year cycle, we got this sell-off, which went all the way through to 1842. This was because canal building had boomed and gone to bust, and land prices had gone crazy, and there was cheap credit, and the market was down 72%. That was known as the Long Depression. And the half cycles of these, we can take 1839 and add 45. We got a big depression in 1884, a bit of a crisis around gold. And the market there was down 20%. Sorry, I was a little quick with that one. And, again, we can take the midpoint here, which was from 1929, add that, you get 1974. We got the big OPEC oil crisis. What do we have right now? Oil crisis. Exact 45-year cycle. We had a big depression. The markets were down. And I haven't seen a barber for 2 months, and my hairstyle is the same as it was in 1974 as well right now. So the other one that I want to show you, and then we'll stop at the long-term stuff and we'll hone it down to see how you can really make this stuff work for yourself, is the 100-year cycle. And basically, 2007, the rich man's panic, that was 100 years on from the 2007 global financial crisis was 100 years on from the 1907 rich man's panic. And the halfway points, 1857, we go back again to 1807, and I'll show you that. So there's the Embargo Act, which I'll show you in a minute. But the halfway points, again, 1857 came in, and you can see that's appearing in the same cycle set as the 72-year cycle. So this is why it was a really big crisis. 1957 was a depression, and 1857 had runs on banks, and we had the same in England in 2007. And, of course, America and Britain lost a lot of banks. But there's a 100-year cycle, 2007 global financial crisis, market down 54%. 1907 rich man's panic, market down substantially. J.P. Morgan was involved by the government helping to reflate things, and the same company was involved in 2007 as well. So 1807 had the Embargo Act passed by U.S. Congress, and the markets crashed again. All the trade of the rest of the world by America was banned. They thought it would help sort the war out. There were blockades in Europe. Nothing happened but a big economic collapse in America. So this is, the important thing. And this was the banking failure I was telling you about in 1857. Again, the end of the railroad boom, and the Ohio Life Insurance and Trust failed. So there was a bit of a global panic. So don't worry, folks, the history lesson's nearly over. But here's how a 50-year pattern repeats. And this I thought was fascinating. This is the 87 crash. Look at the high from 50 years earlier, 1937, pretty much to the day, the low to the day. Look at that pattern overlay, a little blip down here as well. So from around about here, the markets went into a pattern synchronization, and that's I find fascinating. So what we've got right now is all these different cycles coming together. We're 90 years on from the 29 crash, and 45 years on from the 74 low. That's spilling into now. And there was an oil panic 100 years ago as well, back in 1919. And then those cycles carried on into 2020. And 2020 sees the 3-year, 100-year cycle from the 1720 South Sea bubble and the Mississippi land crisis. But also there was a 200-year land panic and a 100-year land panic. So I don't think this is going to be good for real estate, commercial real estate. But also we're 72 years on from the Middle East and, from the formation of Israel. That created a lot of tension and conflict, and 144 years from Britain and the Suez situation. So I think we're going to get some conflict breaking out, which would probably be right to get the price of oil back up again. I'm just looking at cycles. I'm not, trying to be a doom and gloom guy. I like to predict bull markets as well. So that's that. But, the problem with this is that these are big windows, and it's always difficult to time it. And so we've been working on this for the last 30 years, and we created this system where we create these histograms below a chart, and we look in different time cycles. And where these histograms spike, we can see that the market changes direction, and you can see these spikes in the future. So this gives us a distinct strategic advantage. And I think I've already shown you this one. Here are future spikes on the S&P 500. We can predict these 4 or 5 years out. And but if we take this into more detail, if we start off with it, this is a great example of the euro we used back in 2014. We had the biggest monthly cycle since the euro started trading. We knew something big was happening. Well, you got to put it into context. This hadn't happened. The market was heading up. So we knew that there was a chance of this bull move stopping. But then we also had a weekly cycle within a similar window like this. That's the market heading up there. And there was a very strong weekly cycle. And by the way, you can see the next big weekly cycle caught the lows there. But we can take this a stage further. So there's the monthly cycle and the weekly cycle. So we're looking for something here, but it's going to be here on the weeklies. And then we added the daily, and we got the high there to the day, and we traded that down. We managed commercial, proper portfolio. And this is some of the trades we look at. And again, if you look at this, you can see the other cycle points here. But I just want to show you that as a triple overlay example: big cycle, medium cycle, and daily cycle. And this is the beauty of it all. So crude oil, similar thing going on. This was back in 2007. And this was after that, you see these big cycles overlaying with intermediate cycles, and we know big moves are going to end there. And we put all this information in the market timing report where we cover the S&P 500 and gold, crude oil, dollar index, and the euro, as well as Bitcoin through the GBTC. And the idea of this really is to give people timing information. And since we've been going in 2014, these are the turns we've called. Or I'd like to say we caused them. We haven't caused them. We called them. And we've called them all in advance. That's the most important thing. It's not always easy to trade them. I'm going to be honest about that. But that's the S&P there.
Yeah. We've got to pay a few bills. We'll be back in 3 minutes. And we got another half hour with Andy Pencioli of the UK. Thank you, Andy. We'll be right back, folks.
Thank you, Larry.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by thinkorswim. For more information, just click the thinkorswim banner on the front page of TFNN.com.
Okay, we're back. Andy, would you please continue? This is very, very interesting from my point of view. I really enjoy this, so please go ahead.
Well, thank you, Larry, and I'm going to show you some turning points coming up in some other markets shortly. And I'm just going to run through our market timing report. So what we do every month is, all right, this is a monthly publication, and I put some key dates. And these are usually just the strongest dates, usually for the S&P that I see for the month. So this is kind of the big picture stuff. And every section has a detailed rundown on the timing points. And the top bit always has a section in red. And that's where, I say, investors, this is what you need to look at. So if you just, swing trading or investing, you just need this sort of stuff. this shows you where the big cycles are coming in. Then I look at decennial patterns in each thing, and I look for patterns in the 10, 20, and 30-year cycles. And quite often we'll find that there are turning points that repeat in these patterns. And, you can all do this yourself just looking at the history, but we put it together, and that gives us a good idea. And then we, also look, there are certain days with high probability. So, for example, crude oil, the 4th of September, 73.7% of the time since 84, it's been an up day. And, the 29th of September, 78% of the time it's been an up day. So what does it mean? If the market's trending up and the day before, it's probably going to carry on trending up the following day. It's not a trade you take without some confirmation, and you're going to look at, the Fibonacci levels and the support and resistance levels. But this is very useful. It's just all about getting, I don't believe the market can be predicted, but I think you can get the odds on your side. And so then we look at this histogram system, which is our proprietary thing. And this is the DNA of the market, and it's very specific to the year. So, if you get one of these dates from the decennial cycle or from the, whatever, and they coincide with what we call these profit-finding oracle system dates, then you've got a very high probability setup. So if you're in that position, you want to be protecting it or hedging it. You don't want to take the opposite side until the market's proven it. And so we look at seasonal probability as well, so for example, over the last 30 years, I think we'll find that going long gold on the 13th of September, there's a 75.6 probability of gold trading higher on the 28th of September. And we put the ones in for the month that we see fit. And we've just developed this a bit further. But here's an example of how we did this last year. Gold was coming down. We had a very strong cycle set, and 31st of May, we were putting that out in advance from, I think, March last year, and the market was coming down. So people were getting very bearish. There's lower highs, lower lows. This is a bear market, and we had a window. Then we had a daily cycle there on the 29th as well. So we had a weekly cycle and a daily cycle, and we just we got long here, right here. Because we thought there was a very good risk-reward ratio set up. Our risk wasn't going to be very, very high. And as soon as we popped out of there, we got in there, and off it went. And then, what we found also is that people didn't always know how to use the timing stuff. Originally, it was just used by hedge funds. We used to consult to them, and they were quite happy. They had their own techniques. So we created a course, and I show these techniques, and basically, you can see that, just doubling this first range gave us the first level, and then the next levels came in here, and we're around about there. And but you can see how well that worked. We're able to get in, here, and that was a $50,000 move per contract there. So that was pretty nifty. The other thing we love is pitchforks, Andrew's pitchforks and action-reaction lines, but you don't always know when it's going to reverse. And if you have a timing point from the report, that's the day, for example, there to go short. And then is it going to stop at the median line? For those of you that are familiar with these, again, we teach these in our course. If there's a timing point, it will stop and it will reverse. So you can do a stop and reverse. If there's no timing point, it will probably go through to the next level. So that's, the whole idea of knowing when things are going to happen is really can enhance your trading hugely by timing. Now, this is good. This was a doubling of the range on gold here. Now, I didn't see this at the time, but since we started using these, you can see how if you double the range, you'd have got out here if you were smart. But if you had the pitchfork in play, you'd have got out pretty close to the top. And just take a look at this. That's the low, the high back there in 1980 and the subsequent low. And so that's just showing you the techniques we teach in the course that we put with this. But look at this one. This is where we are right now. Now, in our system, we have long-term time cycles for April. We have these action-reaction lines. There's the halfway point very clearly. Look, you got a bit of a pullback there. And that's why, A, we've hit this point here, and B, we have a bunch of our monthly time cycles here. So I'm fairly sure that we're going to struggle to get through here. And I actually am bearish on gold, at least for a few weeks right now. I'm thinking to July. So that, I think, is quite big a point there, because those cycles were monthly cycles for April, and they can fuzz slightly into May. So I think that's a point to note right now. And, just what we do is just to show you how we use this, we actually had very strong cycles. We put an additional report out. This is just going back. But basically, the pitchfork gave us a chance to get in short with manage the risk-reward ratio. That was the first target. and that it fell just shy of that, but we had a time cycle there, so we managed to get out. We actually got out a little early there. But this was stuff that you can do using timing and the right techniques. So it's great for traders. And, I'm showing you macro stuff because we manage stuff over longer time periods, but this works intraday as well. And then back to our report, we put clusters together of our turning points, and we put them in a summary table. And where they all come together like this, something big's going to happen in the world. There's going to be some news out or some data out or something like that. So that's really how the market timing report works. So, you can use it with fundamentals, protecting trending positions. And, if there's no time cycle for a period, then you can stay, in that trending position. You sometimes don't know which Fibonacci level is going to work. If you get to a Fibonacci level and there's no time cycle, we might go through the 382 to the 50%. Or if there is a time cycle, we'll get a reversal. And I've shown you the Andrews pitchforks already. And it works really well with the commitment of traders reports because, they can generate long windows of where a market is potentially starting to turn bearish. But if you don't know exactly when, then that helps with the timing. And what happened was, as I say, we used to use this just and sell it, use it ourselves, trade our own money, the fund we run. And actually, there was a famous billionaire, we have a non-disclosure, who loved this stuff. And they just wanted the timing. But somebody said, well, can we get an affordable version of the report? So we created it. And then they were saying, well, we don't know how to use this now. So we created a course. And we put in there the most successful techniques that we've been using, the same ones we use in the fund. And basically, we've condensed it into a very affordable online course now that's just 5 hours, which explains risk management with a lot of traders just don't understand that. And, last year we presented it live for a substantial sum. But we're also working now on incorporating seasonality in a more advanced level and smart money COT data. And let me just show you some of this. So, the British pound on seasonality, at the beginning of May, it gets very bearish. And we have, this is the blue line is the last 44 years of seasonality. You can see this in lots of places. Then we've got our own little proprietary weighted average. And they're both pointing down from around about now. There we go. So, all factors being equal, this would be a nice little trade into June. So this is where you get the advantage. And, we do have a timing point right here as well. So that's where it works pretty well. And, for those of you that are not familiar, this data is released weekly. It shows what the smart money is doing, the commercials. They're the people that drive the market. And it helps us identify the direction, whereas our system really just gives us turning points. But now we've got the direction coming in. And as I said before, the windows are quite large for where these points come in. So,
Andy, we have to pay a few bills, so stay with us. We'll be back in 3 minutes.
Right.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Andy, please continue.
Thank you, Larry. So here we've got just some screenshots from our Commemorative Traders platform. And in this case, this is the euro. And what we're seeing is it's pretty complex, but the red line is the commercial money. And, basically commercials are the people that they're either producers or hedgers or the market. So if it's a commodity, they'll be the people who make it. And the higher the price goes, as you can see here, the market's going up. They sell more and more. And they reached an extreme here. But this extreme they stayed at for a while. And you can see the market went sideways. And so we had a timing point right here on the yellow arrow, not here. So we knew that we could probably wait till then to look to see if we could set up a short and manage the risk. And that's the beauty of the timing of the system. So, this is what we published in the report. The next major weekly cycle falls week ending 30th March. This is going back to 2018. And, you can see here, look at them, the commercial. This is the average index that we've created. This probably going a little bit sideways here. But, we've got a tremendous move there suggesting that, there's a lot of stuff going on with the euro right now. But let's just carry on with this for a minute. So, we've got our track record on the website. We put it in. We don't always get it right, but it's there for most people, and as I say, we've just been using the system ourselves for 20 years, and people just wanted it. So we made something affordable, and then we gave them a course, and now we're going to give them the more elite course. So, but, here's something that's interesting. I ran some cycles on copper, and, here's this big, you can see these big spikes. It's got all the way back to 1977. And these big spikes tie up with these major turns and major swings. And, some get missed, and that's because they fall into a different cycle set. So I'm just showing you this one chart. But if you look where we are now, the next big cycle isn't all the way through till September 2021. And look how the market's coming down. So I think that we are going to be in a little bit of a recession, really. This will be the first clues, because copper is always a good industrial indicator. And that spike there, we don't know. I'm surmising it's going to be a low then, but it might not be. All I know is that whatever position you're in copper, if you have one, you want to protect it in September 2021. This is the long-range forecasting. I've already shown you the daily stuff. This is the first time I'm getting to show you what we're doing, so I'm kind of doing a spread of stuff here. Equally, dollar index, look at this. There's a major high, major low with these big spikes. And there's a very big spike in the dollar February 2021. So again, there'll be some reversal around about then, because 90 to 95% of the time these spikes create reversals. Gold, we do have a turn point in July. There's a very significant one last week of August into the first week of September, and then another one that's already showing mid-February. Now, we update these cycles, and again, you can see how these have worked in the past. Not perfect, but they certainly give you an advantage. So, I don't profess to be able to forecast the market, but I do think we can get an edge with this stuff. So that's us there, Larry. So, we're at markettimingreport.com, and we do a lot of geopolitical forecasting, at least I do. And, if people are interested in the virus and pandemic cycles and what's going on with China, we've got a report that people can get from andrewpancholi.com. Which is, that. But all the market stuff's on markettimingreport.com there. And fire away with some questions, Larry.
Okay. One of the questions that we're getting from one of our listeners is what is your feeling on the geopolitical structure of what's going on in the UK and also with Brexit and also with what's going on with our elections here in the United States?
Oh,
Do you
wow.
follow that?
Yeah, I do. So every January I publish a year ahead report. Okay. I actually covered the U.S. election for this year. And if you go back 144 years, there was a very controversial election 144 years ago. Who was it? Ulysses B. Grant. But basically, there were recounts, and then it was decided to be decided by. There wasn't the same sort of structure in place as you have in America now. But basically, there was a change of the committee, and then they changed the judge to give the vote to the presidency to the guy who actually got the least votes but was more popular. So I think the election's going to be very, very controversial this year. I personally do think Donald Trump will get in. And I'm a Brit. My wife is from America. So we follow this avidly here. And then Brexit, that's a great question. And I got to tell you this. So whoever's asking about that, we had the election in June, the referendum in June 2016. It was 45 years to the day that the French finally relented and said, OK, we'll let the Brits in. They did not want to let the Brits in with common market. And basically, I've written co-written a book with a guy called Harry Dent, where I put my revolutionary cycles in there. And Trump, Brexit, all this sort of polarization is part of a modern day revolution. And you can go back. The revolutionary cycle is 82 to 84 years. Some of you will know that. And that was the rise of Hitler because Germany felt oppressed after the reparations from World War I. And you go back another 82 to 84 years, Karl Marx and Engels put the Communist Manifesto out. Workers rise up, break free of your chains. There was revolution in Europe. And you take that cycle again, and you get the Stamp Act, which really precipitated and accelerated the American Revolution. So my words are that, and you can double that whole thing up and go back 500 years, and Martin Luther nailed his 95 Theses to the church door in Wittenberg, starting the Protestant Reformation. So my argument is we're in a geopolitical modern-day revolution. So Brexit is part of that. I don't think it's good for the pound. I showed you why the pound would be a short seasonally right now. I think the pound is weak. In Britain, we've got the worst COVID virus death rate in Europe. So does that answer the question?
Boy, oh boy. I guess you're never losing or way for grasping at straws. My God, this is a whole history lesson besides being about cycles. This is really incredibly interesting. My goodness, I hope we can have you back again because this was really fantastic. I really enjoy it. And I know you work closely with Bill Cerubi too, don't you? You and Bill are friends.
Bill Cerubi and I have been friends for 25 to 30 years, and Bill has come onto the board of the Foundation for the Study of Cycles. I do work closely with him. He's a very big friend. He's been a mentor as well, and we work together in some professional areas as well. So we're big cycles fans, and we predict and trade markets. We do geopolitical prediction. That's our passion. Yeah. And he's a great guy, fantastic guy. Yeah. Yeah,
he is a super nice guy. Well, Andy, all I can tell you is, my friend, I'm just absolutely blown away. What we'll do next time is we will try to get down to something specific, like just focus on 2 markets or 3 markets that look really good. But the overview of what you gave here is just absolutely mind-boggling. It reminds me of what Alfie Lavoie did with the astrology part, and that leads to the next question that someone asked: are you looking at any astro cycles in any of your cycles work?
Oh, yeah, I look at all cycles. So I will look at anything that has an algorithm. So that's it. That's the easy way to explain it.
Oh, boy, that looks great. Well, listen, tell the folks how they can reach you, my friend.
Okay, well, our main site for the market timing report is markettimingreport.com.
Andrew, hold that, and we'll have you back for 2 more minutes at the end of the show. You can give them all the information. How's that?
Fabulous. Thank you so much.
Okay. We'll be right back, folks. Andy Vincioli of the UK.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Andy, we have 3 questions. They're all the same questions. What is your feeling on Bitcoin and the cryptocurrencies?
I just bought some yesterday, is my feeling on Bitcoin. I bought it myself.
I guess that answers...
So if that answers the question, in terms of the technical side, yeah, I think we're actually there's a bit of more background to this. I think there's more to the world going on right now than meets the eye, and I literally bought yesterday. So I'm bullish.
Do you have a particular coin that you like, or was it with Bitcoin?
Bitcoin itself, just Bitcoin. I'm not really familiar with the others. I'm new to this. This is the area where I have the least amount of expertise, but I just, my wife and I have been chatting about stuff. She's very, she likes following the political situation. She's very much up to date with everything going on. And I just said, you know what? It's about time we dipped our toe in the water. We missed the first run up, but I am tracking it now, and we do have some cycles now. And, well, they've already kicked in. We've seen it move up. You know, if you look at that market chart for Bitcoin, it's looking pretty impulsive. And, you know, we've got the split coming up in a few days' time as well. I think that's the 11th of May as well, isn't it, the split?
I believe it's the 15th, isn't it?
15th. Okay.
Yes. Yeah, I think it's where it is. Hey, listen, tell the folks again how they can reach you.
Yeah, so we're at markettimingreport.com, and it's a monthly publication. And if you haven't tried it before, we offer you a 28-day money-back guarantee. And this month, I've written a series. I believe there's a bit of conflict coming up, and I think it's going to be what's behind raising the price of oil. and a bit of international tension. Years ending in 1, like 2021. 2011 was conflict in Libya. 2011 was 9/11, and you just keep going back. You see that, but also we're in a big cycle from the outbreak of the Second World War. So I think I explain all those cycles in the latest edition of the Market Timing Report. And if you're interested in the geopolitical stuff, go to andrewpancholi.com. There's a little drop down, and you can get a report there on the virus cycles in China and stuff like that. So that's it. And the trading course we run, it's an online course. Again, there's full details on Market Timing Report about that as well. And we're very shortly creating the elite package with the advanced seasonality and the commitment of traders package there as well, which we're going to have.
Andy, thank you for joining us, my friend. We'll have you on again, and be safe, my friend.
Thank you. I really thank you all.
We did too, folks. That was fun. Andy Pancholi of the UK. See you all on the flip side tomorrow. We'll have Bill